Hi everyone, good morning. I just wanted to go over a currency that I think is going to be a sell potentially in the near future. And when I say sell, I'm talking about shorting the currency, and it is the Swiss franc. Right now, the Swiss franc, if you don't know, has been on a bit of a tear as far as strength wise, right? So let's look at all of the year's highs to the year's lows. So if you on the bottom left hand side, if you got 1 day, 5 day, 1 month, 6 months, and year to date, right? So from 2018, this year. Now I've just got Swiss franc, currency pairs there, and let's look at the really what's happened this year for the Swiss franc. And from 2018, Australian dollar, it's pretty much straight down. Say straight down, but it's at its 2018 lows, which means the Swiss is obviously expensive. The Canadian dollar from 2018 highs to 2018 lows is below fair value, it's going into the expensive area, right? So this is more of a cheaper area for the Canadian dollar. The dollar Swiss is more still into the expensive area, to be fair, but it's coming down and it's getting more expensive for the Swiss franc. I do like this level right here. If we can get down here, it'd be brilliant. Pound Swiss, again, from the 2018 highs to the 2018 lows, we're pretty much right at the lows. New Zealand, Swiss, we're at the absolute lows as well. Euro Swiss, we're at the lows, and the Swiss yen, we're approaching, we're going getting more expensive for the Swiss franc. Now, what you may want to look at fundamentally, and I know this is I normally do technical analysis, but this is a trade idea that you can look to use with your technical analysis, which is what you should be doing anyway, is understanding the mechanics as to why a currency is going to get should get stronger and should get weaker, and price isn't always indicative of potential value, as we know. And in the case of the Swiss franc, right, price getting more expensive is not desired by the Swiss National Bank as far as their monetary policy, right? So this is the article on Bloomberg, right? And Swiss franc rally may run out of steam as gains risk irking Swiss National Bank, right? So central bank to cap strength around 112, says Commerzbank ING. Swiss National Bank reiterates willingness to intervene if needed. And basically, this article talks about the opinions of Commerzbank, and I think another bank, and Toronto Dominion Bank, which basically they think that the Swiss franc and the Swiss National Bank will intervene, right? Because it's not again advantageous for the Swiss franc to really get more expensive. So I'll read some of this stuff and I'll kind of breeze over it as well. Yeah. So Swiss franc rally may be coming to an end as the currency nears levels that some strategists say will prompt the country's central bank to step in to weaken it. Right. They will step in to weaken it. I should say. Right. The franc has climbed 2.5% this month, and this is, by the way, this is August the 15th. So you can see probably from August the 15th. Definitely on the Swiss yen, it's got more expensive. If we're looking at the euro, August the 15th is probably here. Yeah. So it kind of went up from here, but again, 15th, we've gone lower from there. Australian dollar, etc. Right. Right, so the franc has climbed, a 1 month high around 115 per euro as investors seek havens on fears contagion of market turmoil in Turkey. Either these risks will subside or the Swiss National Bank will intervene to cap any further franc strength, according to Commerzbank and Toronto Dominion Bank. We do think, that we could be approaching levels that could attract the attention of the Swiss National Bank, said Net Rumpeltin, head of foreign exchange strategy at Toronto Dominion, adding it's hard to gauge whether there is a particular line in the sand the bank would defend. The first place we think that it could show their hand would be somewhere around the 112 level on the euro franc, right? So the first level they could start showing their hand in intervening, and intervening is basically just trying to make their currency weaker, right? But using certain monetary policy methods is the 112, right? And 112 was here on the 15th, right? 112.50. So we could see it could start to look like they want to defend potentially their line in the sand at the between maybe the 112 and maybe the 110, right? Level, right? I think I read 110 level at some point or somewhere anyway. Right. So the franc's rally this month has upended a steady decline in the past year towards the 120 per euro. During the SNB said the currency was highly valued, right? So the Swiss National Bank themselves said it was highly valued. SNB Vice President Fritz Zerbrugg on Wednesday reiterated the bank's willingness to intervene in the currency if necessary, saying the franc's recent appreciation highlights how fragile markets still are. Policymakers, whose next quarterly assessment is in September, may want to keep the rally in check because its appreciation works against the bank's aim for price stability. I think the central bank might already be getting nervous, said Thu Lan Nguyen, a foreign exchange strategist at Commerzbank. She expects the SNB to step in when the franc strengthens to 110. That's where I got the 110 from, per euro at the latest, although it depends on how the Turkey situation evolves and if it turns into a wider emerging markets crisis. As the lira collapse is obviously politically driven and thus homemade, it is likely that the risk off move we are seeing will fade, right? Potentially. Trade and geopolitical uncertainties are unlikely to blow over anytime soon for ING Groep NV foreign exchange strategist Viraj Patel. Keeping up demand for havens, we do think the central bank will curb any major franc strength around the level of 112 to 113. Since early 2015, the SNB has used a negative deposit rate plus a pledge to intervene in currency markets if necessary to counter the franc's strength, right? The SNB site deposit data is seen as an early indicator for the central bank's market activity, suggests that while the SNB intervened in 2015, 2016 and 2017, it hasn't been as active more recently, right? And again, this is trading economics. If you go to indicators, countries, click on the Swiss National Bank, and then you go to interest rates, it'll give you the Swiss National Bank, basically like excerpts of the press release. This was released, obviously, last time was the 6th of June the 21st, 2018. And it says the currency, it says, all in all, the value of the Swiss franc has been barely changed since monetary policy in March 2018, right? So they were talking about March 2018. So March 2018, prices were pretty much up here, right? It's fine for them there, but now it's obviously weaker, well, stronger I should say, right? The currency remains highly valued. Following the March assessment, the Swiss franc initially depreciated slightly against the US dollar and the euro. However, in light of political uncertainty in Italy, we have since seen counter movement, particularly against the euro. Now this is we'll say the kicker, but it's the, basically just reiterates what, the Bloomberg article was saying. The situation of foreign exchange market thus remains fragile, and the negative interest rate and our willingness to intervene in the foreign exchange market as necessary therefore remain essential, right? So again, they don't want, you can read on the rest, right? So they don't, the central bank who control, monetary policy, right, don't want a strong franc, right? They do not want a strong franc. So what you might want to start looking to do, right, if this starts coming back down again, right, and again we got our setups and stuff, which I'll go into in a sec, is really look for potential buying opportunities. And now that's not to say that this is guaranteed to to bounce off of here or anything like that. Again, prices might come down to the 1.1 level. This might not, but if we have the backdrop of the Swiss National Bank looking to intervene in the currency markets via intervention, and we're already at levels where potentially this is a line in the sand, right, between the 113 and the 110, right? So we've got this wide zone here, right? Then we can start to look for either setups, obviously in this demand zone, or if it, prices create a demand zone, right? And it really creates a demand zone. If we get something like this, let's say for example prices break through there, right? Fine, that's okay, right? And then we start to create potentially a higher low, and then we get a pullback down to any of these demand zones, whether it's that higher low there or that higher low there, right? Then we just look to potentially look for buying opportunities. And again, this all depends on fundamentals and sentiment as well, but pretty much I'm in agreement, because if you think about the I suppose from an economic perspective, and let me go to Swiss National, right? So if you're looking at inflation, first of all, you need a cheap currency, to get inflation, right? So by their currency strengthening, they may not reach their inflation target, right? Which is what they need, right? Which is basically the point of negative interest rates, yeah. So a strong currency also has a negative impact on exports as well, right? So if countries that you're doing business with, the exchange rate is expensive, right? They don't necessarily want to buy expensive goods from you. It's better for exporters of the Swiss franc to have a cheaper currency, because then they can sell their goods for cheaper and therefore more, which obviously adds to the GDP growth rate if you have excellent exports, right? So you're selling more than you're buying, right? So an expensive Swiss franc, right, isn't great for an economy, yeah. Or an expensive currency may not be, great for the economy. And everything moves in cycles. You have, things that get expensive and cheap, and the dollar as well, because we know the dollar is, the most, bought currency, and it's it's one of the strongest currencies, if not the strongest currency in the world at the moment. Within that strength, you will have moments of, of weakness, etc. Right? As well as, inflation going, down as well as up, right? Within the strength, because things are cycles, micro cycles, etc. right? So, but back to the Swiss franc, potentially we could have a technical setup, and I'll get into that in a sec. But this is really the trade plan going forward for the next few months at least, right? And if the Swiss franc, the bank intervene, yeah, depending on the levels that we potentially get down to, this is seen as already expensive, but we get maybe down here to the 1.11, you could potentially be looking at 3, 4, 5, 600 pips of a move, and this is the kind of trade that doesn't always come around every day or every month, but there are moments like this where you want to look to really kind of potentially capitalize, right? So they could be intervening right now and again, if you know about the zero-sum game, in order for for someone to buy, someone else has to sell. So if prices are coming down, you can see that maybe the Swiss National Bank are potentially buying into selling and trying to intervene slowly. But obviously they can't make their hand known. It can't be that obvious. They've got to do it quite slowly until they're ready to really show their hand and push prices to where they think it should be. And hopefully the effect of them intervening will make this Swiss franc obviously cheaper. So if they want to get it cheaper and they want to get it up here, then they're going to make every effort in order to do that, right? So there's your fundamental analysis. Now let's get on to the technicals.